What if I told you that 1 in 4 Canadian homes is not owned by a family that lives in it, but by an investor or a corporation? Now, that shift is quietly changing who controls the housing market, what it costs to buy or rent, and what your chances of owning your home. Promise, this story affects whether you are buying your first home or you already own a home or if you are planning to rent it. Now let's understand the very first thing. Why does this topic matters? Now when we talk about housing market in Canada, the usual angles are prices are too high, interest rate is rising, supply shortage and all those kind of stuff. And those are really important, but a less visible but potentially powerful driver is ownership concentration. How much of the housing stock is owned by people who don't live in by themselves? This is where the corporations or investors comes in buying for a profit, not to occupy it. Now, why should you care? Because ownership structure affects now how properties, and there are certain things like how property used, what let's say if it's owner occupied versus rented versus speculative. It also sees that like how supply works, that is home being used or if it's left vacant. Again, government are doing everything, but these are all different perspective out there. And the other thing is like who has bargaining power in the market, a large scale investor versus individual buyers. Now, by understanding who owns the home, you gain insight into why prices behave the way they do or what are the hidden risks or opportunities might lie ahead of you. So let's take into some number. Now, because the story becomes very clear when you see the scale. So very first thing in this one is like investor buying among residential property purchases. So if you see over here, according to StatCan Canada, in Nova Scotia, New Brunswick, and British Columbia during 2018 to 2020, investors made up the following proportion of the residential property buyer. So if you see Nova Scotia, that is 28.1%, British Columbia 24.8%, New Brunswick is 20.3%. That means in some provinces, 1 in 4 purchases are done by an investor. The second thing to look is the investor's share of properties. Now let's look at the investor share of properties into a deeper look. In 2020 profile of real estate investors, the share of investor owned property. Now this combines like houses and condos and so combination of all the properties basically. In Ontario, it ranges anywhere between 20.2% for investor owners. Another analysis we have over here is that in 2021 data for condo apartment in Ontario, investors were estimated to own 30 to 42% in some urban markets. Whereas for the houses, this ranges drops to 14 to 26%. Now let's check out some of the recent data, which is the recent market share of investor purchases. Now, according to a report by a Better Dwelling, based on the Bank of Canada data, in Q1 of 2024, investor accounted for 30.4% of Canada's home buying transactions. And here's another data from home ownership rates and non-residential ownership. So home ownership rate in Canada fell to 66.5% in 2021. To give you an idea, in 2011, it was close to 69%. So bottom line is significant properties are now owned by investors or used as an investment vehicle, especially in a major condo market. Some of the data also shows that 70% of the condos in Toronto is owned by investors. Now let's see how does this affects everyday Canadian like you and me. So imagine two neighborhoods. Neighborhood A, which is mostly families buying home there to stay in it. So basically a primary residences. Now neighborhood B, rising number of properties bought by investors, maybe for rental purposes, short-term layout, or also maybe to left vacant, which they don't want to, but sometimes that's a game play. Now, what happens when investor ownership grows? Now, houses are held for investment return, not always for a long term owner occupancy. Now, that can drive up price expectation. Like if I buy this, it produces yield or value appreciation. More investor owned stock can reduce the supply of houses for owner occupants. Fewer entry level homes means tougher competition for first time home buyers out there. And investor owned properties may be managed very differently. It means less incentive to maintain the property as long as for long term home, as long as they are getting the rent out of it. Uh, so, this is something that we have noticed. Now, in Ontario, condos have seen investor ownership as high as 40% in some jurisdictions. Now, imagine you are a young couple trying to buy your first condo. You are not just competing with other families, you are also competing with someone whose goal may be to rent that out or flip it rather than live in it. Now, that affects price, availability, and also the negotiation power. So another angle in this one is the financialization of housing, like large landlords buying many units, multiple units at a time, institutional capital entering residential market. Some analysts argue this changed the nature of housing from home to asset, which is very normal. People see house as asset for a long term. Now let's talk about the real impact on this one. So real life impact basically. So more bidding wars in hot market where investor demand is high. So if you are a buyer looking for a primary home, investors are also starting to bid on. Smaller ownership share for owner occupant is equal to basically a less home buying supply. And the other thing in this one is the potential for increased rent pressure since investors often operate with yield expectations. So the big question is this investor presence bad? I would say not always. I work with many investors. Investors supply rental units and can mobilize capital. But when ownership concentration is really high, the risk includes like lower access to families, more volatility, less community stability, and all things like that. Let's see what it means for buyers, especially first time home buyers. You need to recognize that you may not be just competing with other buyers who are planning to buy there for primary purpose, but you may be competing with investor whose goal is very different, like yield, flip, or rent. Research local ownership structure. Areas with high investor shares may have less availability of owner occupied homes and potentially higher prices and different negotiation dynamics as well. Now, for homeowners, this is very critical. If your neighborhood has rising investor ownership, consider that the means for community stability, resale prospect, and also long term demand. Because you all know when the concentration of investor increases in one particular neighborhood, what happens if it's surrounded by homes. And the other thing is like investor may behave differently. Not all the investors, but some out there. Example like high turnover, less maintenance, potentially more short-term rentals. And this factor can definitely affect the neighborhood character and your future home values as well. Now, for policy and system level, high investor ownership raises some questions. Is like, are housing markets serving people or portfolios? Because there are some incentives when people are buying for themselves, but there are also good incentives like CMHC. Basically, if people are or investors are buying, again, they are creating vacancies and things like that, availability of houses, but it has to be in a controlled manner. By the way, I'm also going to make another video on CMHC funding, which is not what many people think it is. Let's summarize the whole video. Ownership structure does matter, not just the price and the interest rate. A high investor share changes market dynamics like supply pricing, competition, resale behavior, and so much more. Now, being aware of who owns the home help you navigate the market more strategically. Now, let's wrap it up. If you found this video helpful, hit like and subscribe for more deep real estate insights like this. And drop a comment below. In your neighborhood, do you see more owner occupied homes or more investor owned units? And do you think investor presence has changed your experience? In my next video, we will dive into what happens if you bought house back in 2016 versus 2024. So what changed between that? Thank you so much for watching. I will see you in the next one.